Welcome back. According to the latest Knight Frank report, Mumbai has experienced a surge in property registrations as the city recorded property registrations of more than 12,000 units between Navratri and Bhai Dooj, resulting in a 30% year-on-year growth. The festive season, the daily average registration rate has climbed from 322 last year to 407 units. To discuss this, we're joined by Ghulam Zia, the Executive Director at Knight Frank India. Ghulam, first, if you could detail these numbers, the Mumbai registrations in the festive period with some historical context. Is this the best ever that we've seen? And what about post the festive season? What should we expect?
Well, as you just said, the numbers are really mind-blowing. The 12,600 apartments sold in that period, which is the festive season from 15th of October to 15th of November, which had Navratri and Diwali in that period, has seen this kind of a momentum which was not seen for at least last 10 years. Of course, about 26 to 28% increase YY over what exactly the same period we have seen. Now, please understand that, expanding it beyond that is a bit tough because the availability of data itself is not that old because of digitization initiatives that have begun a couple of years back. But in the last 10 years number we are looking at, this is one of the best festive season that Mumbai has ever seen. Over to you.
Best in the last 10 years, huh? That's really saying something, Ghulam.
Yeah. Ghulam, what was the previous high? If this time it was 12,600, in the last 10 years, what was the previous high?
Well, this is, as I said, last 10 years have been really, we are just about recovering from the recessionary trend that we had previously. Last year was the best one, otherwise, which was about, as I said, about between 9,500 odd thousand or so. Now we are looking at 12,600. So this is where it is like last 2 or 3 years. Post-COVID, we have seen the turnaround for the real estate, especially for housing. And that is where we're watching it. Prior to COVID, in any case, for about at least 6 to 7 years, it was the sliding market. Year on year, we were watching the number of apartments sold going down. So it's only on that side, 2021 onwards, the things have started turning around. And the numbers we're talking about, if I'm talking about the one which we beat, it was last year under 10,000 apartments.
Okay, got that. Ghulam, so hi. Did you manage to get any more sort of further granular details on the data? What is still selling? Is it still luxury, premium? What's happening to mid-segment? And I'm more interested in pricing. How is Mumbai pricing in general trending? I'm sure it's just going north and north, right? But you tell us.
To start with, let me first talk about segments. Something which we've been very worried about is that pan-India, the lower end of the market has been shrinking, literally shrinking, because the high interest rate, etc., have home loan interest rate have impacted the lower end of the market the most. But in stark contrast, in Mumbai, even lower end market is also doing well. In Mumbai, of course, we have to use different criteria for defining lower end market. But when we're looking at below 50 lakh of an apartment, 50 to 1 crore of an apartment also, these are sizes which are contributing to almost 50% or more of the overall numbers that we're talking about, which simply means that Mumbai real estate is pretty democratic. While the upper end has seen a fantastic turnaround, because the upper end had gone down the most pre-COVID level. On the other side, we do see a huge, tremendous impact on that, and the number of sales in the upper end has been the best. Once again, we keep talking about that best in 10 years. That's exactly what it is. So that's what the upper end is also doing well. But to me, the biggest consolation is that in Mumbai, at least, below 1 crore apartments are more than 50% of the overall transaction numbers, which is great. Because overall, let's understand that for India, the lower end of the market has been holding it in spirit for almost about 10 to 15 years. And if that end of the market is impacted, many other markets will really have a huge trouble in times to come. But at least in Mumbai, it's happening all over. The sales are pretty democratic all across the segments.
Ghulam, there are some changes which have been announced by the government regarding TDR, which is applicable to the Dharavi redevelopment project. Do you want to explain it to us? What exactly was it before? What is the new notification? And how does this change things?
No, we haven't been able to analyze that yet. We are working on it, but new TDR norms obviously will also give a huge reason for the feasibility that was always impacted in Dharavi. There have been concerns about redevelopment purely because of the TDR availability or even land. So earlier, when railways gave about 40 odd acres for redevelopment, it was looking more feasible. With TDR going up, of course, it's swinging. It can swing both ways. The big concern could also come because of cost of construction, because increased TDR means you going vertical. And verticality improves or increases the cost of construction a lot. So while you may be able to construct more, but then the cost of the same construction will be much higher. Cost of TDR itself will not be that much of a problem, but the construction cost will really be a concern. And that's where I would want to relook at the numbers. And I'm sorry, I think Sonia's question was about pricing of real estate overall. And if you allow me to just take a broader perspective of where the real estate prices are in Mumbai at least, well, the concerns are that the prices are going up. While it is still not that high, an average annual increase of about 6 to 7% is what we have observed thus far, which is not too much of a worry, because if you look at the inflation, we are still a bit negative. We're going at least about 100 bips below the inflationary numbers. So net, we are not that much in a negative zone. But times to come, if the developers get too excited about the velocity of sales and the number of apartments sold and start increasing the prices, and affordability question once again comes up in near time, that's where the concern for the overall real estate market will arise. But for the moment, the prices are not that bad to look at. About, say, the good projects, the good developers are touching almost 8 to 9%, but weighted average increase is still in the domain of about 6 to 7%. So overall price rise yet, Sonia, is not so much of a concern.
This is Gulam, this is Surabhi, by the way, not Sonia. But okay, so you're saying the average price increase over last year has been about 5 to 6%, right?
6% to 7% thereabouts. The higher end, we are looking at 8 to 9%. The good developers, good projects are actually touching even 9% per annum kind of a price growth.
Okay, so just help us understand this. And this Dharavi is a very complicated beast, right? And it's just been going on for years and years. Whenever redevelopment starts, first of all, I don't know, what's your base case sort of analysis saying? Are you expecting it to kick off anytime soon? And I'm not sure what the specifics of this notification really, spell out. It's very complex. But basically, if the developer, Adani's right now, if they get to have equal TDR, whatever is being developed in Dharavi, an equivalent amount of TDR is available for other areas of the city, what does it mean? I mean, from a lay viewer / investor / home buyer point of view, what does that mean for Mumbai?
Look, first of all, the concept of TDR is such that if you can load it on the same project or the same property, you obviously get much better returns, because then you have a finished good where this TDR is used. But if you have to take it away, like since you're talking about Dharavi, you will be taking that TDR away and selling it in, say, other markets in western suburbs or anywhere in Mumbai. The price normalization is such that the benefit that we used to get, say, about 6-7 years back is not existing anymore. So it's a pretty flattish kind of a price for TDR that we will look at. And that is where the concern is, that if most of what you are developing is giving you only the TDR benefit, then the developer's profitability margins would be under severe constraint.
Okay, I think this surely requires a deeper and more prolonged discussion, and I'm sure we will have that. Just, by the way, we have 30 seconds left on the chat, Gulam, since we have you with us. Oberoi Realty is expanding into Gurugram. I don't know, you don't talk about individual companies, but what's your thought? I mean, a very successful Mumbai developer decides to get into, the DLF heartland, so to speak. Your thoughts?
Well, the question still remains, when a developer from a different region walks into a new arena, first of all, recreating the whole office operations over there will have an impact. And since you are still a new brand, for you to establish yourself in a market like that is going to be taking some time. Even if you are a big branded developer, you will have some resistance to in a market where there are champions already existing. And whatever said and done, real estate is a very, very regional market. So shifting from one location to the other, that does pose a lot of problems. But then whatever said and done today, the big problem is that the real estate developers are far and few. Last 7-8 years, many of them have fallen by the wayside, if not in the jail already. So the concern is that we do need good developers all over the country. So the relocation could be
sure.
perhaps in the transition period would be good.
Okay, got that, Ghulam. Thank you very much for that. Always a good chat. Appreciate you joining in. You know, Rima, like the Bangalore folks are coming here, Prestige and whatnot,
yeah.
and then you have the Mumbai folks moving to Delhi. It's an interesting market.
Absolutely. Everyone wants a piece of that growing pie, right? We'll get into a break. We'll come back with more.